Daniel Gramza, President, Gramza Capital Management. Good morning, Dan, and thank you so much for joining us.
It is my pleasure to be with you. Thank you.
So Dan, of course, I'd like to kick off with this major story. We're talking about the Fed Chair, Jerome Powell confirmation. I was wondering, what's your first take on this choice, which is certainly a hard choice for President Biden? He said it yesterday. He said that the progressives wanted Lil Brainerd as a Fed Chair. Instead, he has chosen, of course, Powell because he wanted to have this how can I say, this pace of monetary policy as it is.
Yeah, I think that's exactly what it says. It says something about consistency. And I really personally think Powell's doing a good job. I'm glad he didn't make any changes. He has set the course. It's not unreasonable. They also say consistently that if the economics change, that they're willing to change their policy. So I like that approach. It's a logical way to look at our monetary policy, and that's what they control. So I think it was a good choice. Now, from the market point of view, they're saying, gee, what does that mean? It means Fed could still continue to taper. It means that there could be an increase in interest rates. And we're seeing yields changing as a result of that. Some of the things that you just talked about, excuse me, is a result of that anticipation. So the market, I think, overall, even though we saw some downward movement across the board in a number of indices, I'm not bearish on the markets. I think the markets have absorbed what you just said. It has absorbed Powell being renominated, and I think, again, I think it's a good thing. The market did react, but I'm not bearish.
Well, that's pretty interesting. I was wondering then, how do we have to interpret what is going on with the bond market? Because we did see after the announcement an immediate increase in treasury yields, so far at 1.65 when we talk about a 10-year treasury, but it was at 1.55.
That's right. And I think that potential for some upward movement is the anticipation of Powell being a consistent choice. It's the anticipation of changes in interest rates down the road. And what's fascinating to me is this hasn't happened, right? There has been no change, but yet the market's anticipating that change. And I think that's a result of the changes in yields that we're seeing. You know, not only in the United States, but as you were pointing out, if you look at Italy, Germany, France, UK, there's a number of countries where those yields are coming up as well too. It's a global impact that people are anticipating. They're anticipating, but it's not reality yet in that regard.
So overall, do you think that the market's reaction when we talk about equity, bond market, gold, if you want to call it, was positive?
I think it's reasonable. If you look at what's happened in the equity indices, and I was talking about this in a daily video I do at dangramza.com. If you look at the, let's start with the S&P. If you look at the indices, they were weak. But I break it apart by time zone. So yesterday, when this announcement came out, Asia is not trading. So as our market finished, Asia begins, and Asia reacted to that same downward movement. What's important now is what we're seeing coming to us from Europe, from your side. And I think it's bullish. I'm looking for an up day in the indices.
On the other side, we also saw a pretty interesting reaction of the dollar index, which is above the 96 mark, despite the fact that today it's slightly below the flat line. Euro dollar 1.12, a dollar against the Turkish lira 12.47 right now, 12.4930. So what are your expectations in terms of dollar index and dollar strengthening?
Well, right now there's nothing for us to say. We look for it to come off. The dollar maintaining the momentum that we've seen seems very reasonable right now with some of the uncertainty that's out there. The issue, though, it's where we are. We're at levels that we could start finding some sellers coming into this market. You know, between 95, or actually say 96.5 to 96.70 to 80, if buyers are still here, That's where we should be closing by the end of the week. And the Turkish lira, you know, it makes sense. There is a lot of uncertainty there right now. So to see that kind of movement, it's almost divorced from the rest of the market because of the fundamentals that are driving the expectations in that market. Look at that chart. And nothing, even though it's found some sellers at higher levels, I still think we should be cautious. Tomorrow in that market, I'd look for an inside to only slightly higher movement.
Well, that's pretty interesting when it comes to the Turkish lira, but of course we have another major story, which is the crude oil. I do see that a crude oil is once again clawing back some losses. The WTI at $77.70 per barrel, 1.63% higher. Brent back above the $80 per barrel. So then we also have a major story, which is the opening of the WSJ, US and other countries to tap oil reserves in bid to tame inflation. Which looks a little weird. I mean, I'm just wondering what could be the very short-term impact on the U.S. consumer in terms of gasoline prices. But of course, this is going to be, I guess, an unanswered question. In regards to crude oil prices, what is the price range that you expect from now to, of course, the end of the holiday season?
I would look for it to stay in a $5 range, between $75 and $80 a barrel. You know, there's a few different factors, and you bring up some really good points about what's going on. We're seeing an increase in release of 50 million barrels in the U.S., but we also have China, Japan, South Korea, India, UK. They're also willing to put out some supply into the marketplace. So that may dampen some of the movement. But let's go back to your other point when you said the consumer. When do we see a difference? That's not going to happen immediately. That it takes a while for our market to absorb a change. In other words, we can react to supply changes quickly, but by the time we see it at the pump, that could be a while. That could be a few months even. So we may go through this holiday season with no changes in gasoline prices, although that will be the expectation. Now, the other thing that's dampening possibly some of what we're seeing is this doggone coronavirus. We're seeing an increase in cases. So for some people traveling, that may dampen a little bit. Right now in the United States, we're not seeing signs of that, but that could also have an impact if longer term we now see travel changing. We see the driving changes because people are not going to be going back to those offices. That may be felt in the marketplace. But I think a sideways move here for Brent and for crude makes sense.
Yeah, that's pretty interesting. On the other side, in terms of what is President Biden and many other countries that you just said, India, for example, China, and few more are doing. OPEC Plus already said that they're ready to adjust their output. So who is running, how can I say here, the business kind of is exactly OPEC, because they just can adjust output. I mean, nothing changes in this case.
Oh, that's a great observation. Yes, so they add some supply, all right? And the market saying, oh my gosh, they're adding supply, and there's a reaction. But what's next? And that's, I think, is the big issue. So if we release some supply, okay, but is it long lasting? Is OPEC, which has an impact of about 45% of the global supply is from OPEC, are they going to maintain this then? Are they going to continue to support increasing supplies? That's yet to really be determined. So yes, releasing some supply into the marketplace, okay, takes a while to be absorbed. And then we need to think about what happens after that supply is absorbed. What's going to support that? And that we don't know yet.
Then I was wondering, final take on the gold, which is pretty interesting. We were, how can I say, talking just last week that we are expecting the gold to hit $1,900 an ounce, despite the fact that despite this fact, it's up about 0.7% today, and it's trading below the $1,800 an ounce. So I was wondering, do you think that the gold price is reflecting the current economic situation, the current inflationary pressures, the current political situation, if you want?
Yes, and that's a very good summary, Alex, because if we think about gold, what does gold need to motivate it? I think of it as an excuse market. Yields are going up. Well, that's bearish for gold. The dollar is positive. That's bearish for gold. So we're not seeing things that typically stimulate gold in that regard. And the result is we're seeing it coming off. 1750 is not out of the realm. And if we saw that kind of action, you would expect to see something like that by the end of this week. If we do, then I would look for a sideways move. We've seen buyers coming in before at 1750. So it'll be interesting to see if we go there. And the second thing we want to look at is, how do we go there? Is it one big move, or is it tiny little moves getting down there this week? If it is, then I'm looking for the possibility of a somewhat recovery next week.
So final take, Dan, you are bull when it comes to equities, right?
Yes. I'm looking for, if you look at the S&P, 4720 would be my next objective to the upside by the end of the week. The NASDAQ market, 16,500. The Dow, 35,800 to 900. The Russell, 2370 to 2380. If we saw that kind of movement, again, by the end of this week, then I think we're going back to a possible uptrend. However, we still have the issue of the COVID that can dampen some of those expectations, because if we do slow down, it's going to have a trickle down effect to these markets. But one other thing I just want to mention here, and that is, let's talk about the U.S. consumer. Housing permits are up. New existing home sales are up. People have money and they're willing to spend it in the United States. We are a spending society, and we want to remember consumer spending is 70% of our GDP. And right now people have that money and they are willing to spend it. And I think that's something that you and I want to monitor as we go forward through the holiday season.
That's for sure. And talking about holiday season, then happy holiday season. In the short term, I'm talking about Thanksgiving. When times comes for Christmas, we're gonna say each other Happy Christmas, Merry Christmas.
Well, thank you very much.
Early yet.
Yeah, that's right. Not yet.
Long way to go.
But in the stores, they're already showing Christmas stuff. So
I know. Here is same as well. Here in Milan is same as well.
Interesting. But thank you for your good wishes.
Thank you, Dan. Once again, happy Thanksgiving, and talk to you very soon.